Good evening. This is 20th day of April 2025, and this is gold analysis, and I'm on a daily time frame. The reason why I come here is to remind you guys of how to do a proper uh, top-down analysis to catch long and important trades. So, on this top-down analysis, you can see that yes, I was expecting this high to be taken at that time, and the high was taken, and market did some trace and created a lower high. Then market came back down to create a protected high. This is a protected high. This high here is a protected high. If you are selling, that is the place where you ought to put your absolute stop loss to be at, so that you be in the profit. So that's the protected high. See me just look at it right now. So now, how do I determine my trend? Where there's a change in trend. My trend is like this. This is one move. This is one move. So now, this low was swept by this candle. Immediately that low was swept. The next time the market come down to break the low that swept the candle, which is this one now, break the low. What I now have is a change of character, which is a market structure shift. You see me marking it. So once the thing here is that I wanted to establish a structural change on a higher time frame. So you can see here the structure was confirmed on high time frame. Now once I have that on high time frame, you have to sit patiently and wait. You can come down to the hourly time frame and also try and to see whether the same thing is formed. So on the hourly time frame, you will see that the structure is the same. You can see the structure is the same, and this is where the hourly time frame actually broke here. You can say this is a market structure shift on the hourly time frame. This is where the structure, the lowest part of the market here. This is where it occurred, the market structure shift. So as for visibility, you want this one to be just be visible on the hourly time frame and leave the daily out of it, so as to have a clearer shot. Then this one I originally draw that one from a higher time frame, which is daily time frame. So I'm going to erase it as well, put it to daily time frame. So it's only when I go to daily time frame you see that, just to get a clearer shot. Then after that will occurred, you see that the shift to market structure will occur on the higher time frame. You can now go to 5 minutes time frame. So on the 5 minute time frame, what you do is that this particular trend that is going upward, we are going to monitor it on the 5 minute time frame to the reason why we're going to monitor it is just to see when the market is going to break. You can see as it was going up, it's an uptrend, right? So look what happened again. You can see that market liquidated this low, created a strong low, and went high, broke above this high, and come back. So the next break of this low here, this gives the market structure shift in the market structure. So now we have this to this as our trading zone. Now what we look at for was a taking of inducement. So the after this break of structure, this was the first pullback into the range as market did liquidate the low, the high. This is the high. This high here is I can't get clearer. This high here has labeled the major inducement as it got liquidated by this week by some pips or so. Then market used momentum to break down, to go down, giving a break structure. So therefore, this now establishes a trading range from here to here. And overall, we have this to this, but once the market does this, we have here as a potential area of interest. So it's the confirmed area of interest with a minor inducement here and a block. This block now, you see that we went to um 5 minutes to we went to 5 minutes to get what, to get the structural shift, confirm the structural shift again, and 5 minutes to see that if the 5 minutes align with other higher time frame. Then um now when you look at this area where I drew block from, you have to calculate three times of this, two or three times of this to get an actual block. So two or three times of this, which is three times of this 15, 3 times 5 15. So for you to get a clean block, you have to count to three times of that time frame, which is 15 minutes. On 15 minutes, you can see this was the place that liquidated. So now you have here as the we now have this as a potential strong high. That's what this means. This liquidation means that this is a protected high. That is why we can trade and put our stop loss above uh, above here, the protected high. So what the market did now, the market came in here to sell off. It came in here, tap into the other block that was there and sell off. Now, how do we determine our place of like I said, the protected high is our stop loss. Then how do we determine where we want to target? Now, from this whole daily range, from the top here, yeah, down to this low here, is where we draw this Fibonacci 2. We put the Fibonacci 2 from here to here, draw it from here to here. Now, the extension, if you want the extension, these extensions, this 1 point something, 2 point something, and we have 3 and 4. I think I hit some of them. I hit the other ones. If you go to the setting of Fibonacci, you see what's it called? You will see the other levels. So I think I disabled this one there that time. I disabled it, so you can see. So this is, oh, I disabled this one. So this these are the points to target: one, two, three, four, which are your four TP area of target. So that's how you enter this kind of trade, and you just hold your piece. The market reach your zone. So now look at what after this, the market have gone down close to this area. So it's still selling up to here. Until it gets here, we are not done. So if you go to my channel, you see that I have marked out this buy zone for long, for like some weeks now, and the market is approaching that area which we're going to get the buy up. So that is just a video I want to make, a simple top down analysis, and I just hope you guys can learn from it. So take care, bye bye.